In this video, we will be talking about the four scenarios of cash flow statement, how to account each and every scenario where the price of the asset, the value of the asset is decreasing when compared to the previous year. If you look at these four scenarios, all the assets have higher value in the previous year, and when you compare it with the present year, the value and the closing value of the asset at the end of every year, at the end of every current year, has decreased when compared to the opening value. So how you have to account for it? Because when the value of asset increases, you automatically know that yes, it can be purchase only, that cannot be any other thing. So and for, at your level, you are very fair to assume that it can be purchase only. Now, what if the value of the asset decreases? How to understand it? So let me introduce you a couple of rules here and you make a note of it. So let us discuss the first scenario. In this case, land has decreased, value of land has decreased from 50 lakhs to 40 lakhs. Now, common sense says that land will not be subject to depreciation. Land normally doesn't get depreciated. Therefore, this decrease of rupees 10 lakhs comparing to the previous year, you have to assume it as a sale only and not as depreciation. See, when the asset prices increases from the previous year, increase means it can refer only to purchase. But if the value of asset decreases when I compare it with the previous year, there can be two options. One, it can be sale or it can be depreciation. Now this video is about telling you what you should assume. Should you assume the decrease as a sale or as a depreciation? Therefore, the first thing, if the relevant asset is land, then you have to assume it as the decrease is sale only. Okay, now the second thing, patent. Patent, there is a rule that if the question doesn't say the decrease of intangible asset, how it happened, then you have to assume patent normally doesn't get sold. Okay, so the decrease of patent cannot be assumed as sale. Therefore, the decrease given in this question of 2 lakhs, you have to treat it as depreciation only. Let me quickly also tell you, if you had assumed it as sale, what you have to do? You have to go to investing activity and you have to add the sale amount as cash inflow. In this scenario, patent, a decrease in patent will be added in step 2 of operating activity. Yeah, that's it. You will do only that much. It will be treated as depreciation and non-operating, non-cash expense. So you just have to add it back in operating activity step 2. Okay, now moving on. Third scenario, machinery. Now machinery doesn't follow any fixed rule. You compare third and fourth and study that together. First, let me explain asset number 4, which is furniture, because the additional information has clearly stated the value of furniture has decreased by 25,000 comparing to the previous year. Therefore, this decrease of 25,000, it has to be treated as depreciation only because the question has said it. So you can't assume that as a sale. Therefore, this will also be added in operating activity, step number 2. Now, if you see machinery, the value of machinery has decreased, but the question has not stated anything regarding the decrease of machinery, whether it was a sale or whether it was a depreciation. Therefore, you can assume either way and you state the assumption. You can assume either way. You can treat it either as a sale or as a depreciation. Suppose the question had said the decrease of 2,50,000 of machinery, the machinery was actually being sold, then you have to treat it like sale only. That time you cannot treat it as depreciation. If the additional information clearly states regarding plant, furniture, machinery, computer, motor vehicle, all tangible assets other than land. If the question doesn't say so, then you can assume. But if the question is clearly saying whether it is depreciation or sale, you have to treat it as per the declaration only. So land depreciation doesn't apply. Always treat it as sale. Intangible asset, patents, copyrights, trademark, goodwill. You have to treat the decrease. You cannot treat the decrease as sale, not sale. You have to treat it as depreciation only. Any asset other than land and patent, land and intangible assets, the other tangible assets, if the question said it is depreciation or if it is sale, treat it as depreciation or sale accordingly. If the question is absent, you can assume it as sale or depreciation. I hope this was clear to you. I hope this made sense. If you still have doubts regarding this concept, let me know in the comment section. I will clarify. I will see you in the next one. Thank you.